It's January 3rd. JLD here, and welcome to MSTR Today and the Treasury Titans. Nothing in this video is financial advice, but as you can see, Michael Saylor's running a marathon, not a sprint. And it appears he's pretty fired up about it. Let's go ahead to Michael Saylor's post, which is Bitcoin is a marathon, not a sprint. He's got his eyes on the horizon. He's looking in the distance. He doesn't care about the day to day, the month to month. All he cares about is stacking Bitcoin. All he cares about is getting the biggest pile of the apex predator in the world, the most pristine capital that has and ever will exist, Bitcoin, onto his balance sheet. And guess what? He's doing it. I'm looking forward to 2026 to see what he does. I'm going to have a little 2026 prediction episode coming up here in a little bit. So let's look forward to that coming up. But until then, Michael Saylor wants us to know that Bitcoin makes MSTR liquid. And this is the average trading volume. This is the 30-day market cap. Look at MSTR absolutely destroying the Mag 7. I mean, it is literally 3x Tesla and more than 7x, more like 10x actually, every other Mag 7 stock. That's the average trading volume. Because guess what? MSTR strategy is liquid. And what makes it liquid? Bitcoin. And guess what? That makes it interesting. Boom. Chris says, if you want to own the future of digital capital, you buy Bitcoin. If you want to own the future of digital credit, you own MSTR. Do you understand? I own both because I love both and I'm a huge believer in both. Yes, I want to own the future of digital capital. I have Bitcoin and cold storage. Yes, I want to own the future of digital credit. So I own MSTR, of course. That's the future of digital credit. It is so obvious what Michael Saylor, Fong Li, and the rest of the strategy team are doing. It's absolutely amazing. Zink says, strategy is already a $1 trillion company in my eyes. With Metaplanet, it's just such a glaring opportunity for a small cap, tiny market cap that will genuinely 100x. Crazy. And I'm on board with the Zinks. I'm a huge believer, obviously, as he is in MSTR, but I also think that Metaplanet is going to do amazing in the years to come as well. More on that to come. Strategy Maxi says, Bitcoin is flying and not dumping on open like we usually do. We are so back. It is 2026, and the Fed injected $75 billion during New Year's Eve. It is the year of MSTR and Bitcoin. Here we go. And then he wanted us to know that as of yesterday, MSTR is the best performing stonk of 2026. That was the year to date. It was up 4.8% at one point, which put MSTR as the number one performing stonk of 2026. Of course, it was just, 1 day of trading, but hey, we'll take our wins where we can get them after 2025. Am I right? Adam says, the scale of what Saylor has done since August 11th, 2020 is mind-boggling. 60 billion of Bitcoin acquired, 1,970 days since the strategy began. 60 billion divided by 1970 is $30 million per day. $30 million a day of assets acquired for over 5 straight years with zero operational overhead. There isn't a better business model in the world. The haters will continue to foam at the mouth, but the reality is that strategy is a balance sheet fortress and a company of unparalleled financial strength. This will become increasingly clear as time goes on. Nobody will catch the Bitcoin herd. True story, Adam. And Dylan says, we've gone from a $14 million hotel with no future to a $3 billion company that's the 4th largest public Bitcoin holder in the world in 20 months. Our stock is up 2,000% since adopting Bitcoin, and our market cap is up 20,000%. Now, by the way, this is after their stock dropped from 16 to like $3, is now at like $2.50. So it's still up 2,000% despite that. That's insanely amazing. Bitcoin is going higher. We are undeterred. And Adam has a nice post on Metaplanet as well. He's really excited for Metaplanet 2026. They had a 2025 Bitcoin yield of 568%, which is insane. For 2026, the Bitcoin yield drops all the way to 100%. Bitcoin goes to 150,000 and MNAV re-rates to 1.5x. The stock goes from $2.52 today to $12.90. That is an easy 5.1x given those parameters. If Metaplanet gets more yield, Bitcoin moves more, or the MNAV increases more, that's when things can get fun. 2.0 MNAV gets you 1720 per share. If we do 150% Bitcoin yield, 2.3 MNAV and get 160,000 Bitcoin, that gives us a fabled 10x from here. 10.4x actually, that's 26.3 per share. 945% potentiality. That's just 1 year too. Yes, perhaps it takes them 2 years, perhaps it doesn't. And there's just additional Bitcoin yield in 2027. Let's say it takes them 2 years for a 250% Bitcoin yield, $200,000 Bitcoin, and a modest 1.5x MNAV. $30 per share exactly for a 1,000% return. That's 1,090% return. Let's say in 8 years they've achieved a 500% Bitcoin yield. Bitcoin's at $1 million and MNAV's at 1.5x. That is a 102x from here, or a 10,000% gain for a $257 stock price. Oh yeah, this is modeling in zero price effects of leverage and amplification. Not financial advice, and I'd recommend a rock solid conviction in Bitcoin before even studying this trade. End of story. If you're not bullish on certain Bitcoin treasury companies like MSTR and Metaplanet, I don't know what you're doing. Anyways, we have a great clip from Michael Saylor coming up. Nothing in this video is or was or ever will be financial advice. Have a wonderful Saturday.
And what I would say here is you just have to think different, and you have to think much bigger with regard to what you can accomplish here with this technique. What we do is we accrete Bitcoin per share, right? So our equity investors want more Bitcoin per share. We started with 56,000 Satoshis a share, and we added every single year. We added about 74% more last year and 26% more this year. There's a lot of ways to do it. You can sell equity, you can sell bonds, you can sell preferred stocks, you can sweep cash flows. This is a snapshot of the company's balance sheet. In essence, we're 1.1 levered, we're 1.3 times amplified, and we have 84 years of dividends. You know, when Lehman got in trouble, they were 30x levered, and then they went to 50x levered. At one point, they had 15 billion of equity and $750 billion of assets. Right, so I get preached to a lot by finance bros that want to tell me don't get too levered, but what I want to point out is we're not even 2x levered. And literally the leverage is going to 1. That debt is going to go away. So the interesting thing to do here, of course, is to use credit that is equity to amplify your performance, because if you do that, you can do it without credit risk. And it's very interesting.
When you want more for your business, start with Northwest Registered Agent and get access to thousands of free guides, tools, and legal forms to help you launch and protect your business all in one place. Build your complete business identity with Northwest today. Your business identity is more than your logo or website. It's everything that defines who you are and how you operate, from what your customers see to what they don't, like operating agreements, meeting minutes, and compliance paperwork. With Northwest, you'll get more for your business, more privacy, more guidance, and more free resources than you'll find anywhere else. For nearly 30 years, Northwest Registered Agent has helped entrepreneurs form, grow, and protect their businesses. They're the largest registered agent and LLC service in America, powered by over 1,500 corporate guides, real people who know the local laws. It can help you every step of the way. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks and 10 minutes. Visit www.northwestregisteredagent.com/JLD free and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/JLD free. Michael Saylor just made an $835 million bet buying the Bitcoin dip. Right now, Bitcoin's fallen almost 40% off its October high, and the big money is buying the dip. What's your strategy? Now might be a great time to convert your IRA or 401k to Bitcoin with the help of Bit IRA. Plus, you can fund it with pre-tax funds, then continue to invest in it over time as you do any other retirement account. Bit IRA protects your assets with end-to-end insurance, highly secure storage, multi-encryption, and registered with the U.S. government. Your IRA is fully IRS compliant. Best of all, you can trade crypto within your retirement account without incurring taxes on any buys or sells. Just go to bitira.com/JLD and request a free info guide. Once you do that and open your IRA, you'll get a free ledger. Bitcoin has proven time and time again to rebound, every cycle going from a higher low to a higher high. With Strategy's latest purchase, Michael Saylor clearly believes Bitcoin is at a discount. Time for you to get into. Go to bitira.com/JLD to open a tax-sheltered IRA in Bitcoin.
Our future is in credit issuance, right? What I said, the day you were born and the day you figure out why. Why are we here? We're here to sell digital credit. And the product is the credit. And so we just got a credit rating from the S&P. We're the first digital treasury company to get a credit rating. It's pretty much the worst credit rating you could justify. We're starting at the bottom and we're crawling up. And it's predicated upon the Basel Accord, which it suggests that Bitcoin is worth zero. It's zero capital. So you have a banking establishment that values Bitcoin as zero, but you have the marketplace that thinks it's worth $70 billion. Over time, we will rectify that, just like with accounting standards, we were able to rectify that. And as that gets improved, then our credit ratings will move up. But the significance of a B credit rating is that instead of having access to 2.8 trillion worth of capital, you now have access to another 4.9 trillion. So we 3x the addressable market for credit instruments that we're selling. And the most important thing is to allow fixed income investors and insurance companies to allocate to that part of their portfolio. So we thought that was auspicious. Our ambition is just to continue to improve the credit rating until we're an investment grade issuer of credit. And that takes me to the product, right? The product is digital credit, right? Did it exist a year ago? No. We invented it. Necessity is the mother of invention. Why do we invent digital credit? Because traditional bonds are too risky. We tried traditional bonds. We tried asset-backed borrowing. We found that either the bond market wasn't large enough or wasn't stable enough. And pairing traditional short-duration credit instruments like bonds with an asset like Bitcoin, which is highly volatile, creates a very dangerous situation where you might get forced liquidated or you might get yourself into a credit crisis. That's not good for the equity. And so over time, right, this is the conundrum that every financier has, right? How do you go bankrupt? You lend long, you borrow short, right? A bank has overnight deposits and puts out 30-year money, and then people want their deposits back, and you can't call the loans, and so you get a run on the bank. When Lehman went out of business, they were borrowing $700 billion for 15 days, and then they were invested in mortgage-backed securities and real estate with a 5, 10, 20-year duration. So obviously, you don't want to mismatch your durations. If your goal is to buy an asset, what is Bitcoin? Bitcoin is a 10-year duration asset. If you're going to buy it, a normal time frame would be 10 years, 120 months. So what you want is a duration on your liabilities that is comparable to that duration of Bitcoin. So how do you get to 10-year duration money? You can't do it with 5-year loans. So we started thinking that what we'd like is to get 10 to 20-year duration, and the way to get that is with preferred equity. And so we went to the market and we thought we're going to sell preferred equity, and we found that the market wants a higher dividend yield for preferred equity than for bonds. And our first reaction was, oh, that's bad, that's a bug. And then after a while, we realized that's actually a feature. If we're paying 200 basis points more than we thought we should pay, then our credit just became the highest yielding credit in the world. And when you flip it from a bug to a feature, then you start to see something different, which is the credit that we issued from 2020 to 2024 was tactical credit in order to amplify the equity. We were trying to. The product was the equity, and the credit was the tactic. And what happened in the last 12 months is an inversion of the business model where we realized that the credit is the product and the equity is the afterthought. The equity follows from the credit, and the real product is, what if I gave 10% dividend yield to 1 billion people tax deferred and stripped the risk off it? Well, that's a product. That's a product that would appeal to everybody, but maybe more interesting, that might be the best product in the world. Say that again. That might be the best product in the world. If you can give someone 600 to 800% of additional yield over the risk-free rate in a non-volatile instrument in the currency of their choice, you've created maybe the perfect product, because that's what everybody wants. And we tripped over that. And we started by doing a convertible preferred strike. We over-collateralized it. The effective yield was 9, but we realized that it was going to be tax deferred. So the actual adjusted yield goes to 19.7%, which is just off the charts. And then we did another one, Strife, and here I'm describing Stride. Stride's the junior credit instrument. The effective yield's 13%, but it's a ROC dividend, which means you have tax deferral to it. So the actual effective tax equivalent yield is 21%. Okay, it's the crappiest thing in the credit stack. It's the lowest grade one. It's 4.2 times over collateralized. There's not an investment grade company that you can find that's 4 times over collateralized in the conventional, traditional credit market.
What's the second best? There is no second best.